The following is a presentation of TFNN. It is now time for The Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 22nd magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools so that you can lead an inspired life. Because leading an inspired life, folks, that is what it's all about. Hopefully you had a fantastic weekend out there. I know I did. Let's go take a look at one of our tools. I love this tool, and so will you. This tool is called Enthusiasm is Contagious. Oh, and what an enthusiastic Friday we had as I did my online workshop on candlestick charting and so much more. And I want to personally say thank you to each and every person that attended, whether it was live or via the archive. I believe the archive version of that is going to be up on your members' pages by tomorrow. Enthusiasm, folks, that is contagious. You know, the energy that makes companies move really depends on the individual enthusiasm. Leaders with bright ideas, folks, leaders, they're the ones that have got these bright ideas with the ability to just simply inspire higher thought out there. And, you know, leaders, what they'll do, folks, is they take action, and they're really the generators, if you will, of energy out there. Their individual brand of enthusiasm rubs off onto everyone around them, whether it's coworkers, whether it's people that work for them, they work for others, whoever it is, their customers, everyone. Enthusiasm, folks, is absolutely a contagious thing. And there's a great book out there from Brian Tracy called How to Succeed. If you haven't read it, I recommend that you pick it up. He talks about enthusiasm out there. He's got some nice quotes on enthusiasm. Henry Ford does as well. Henry Ford was quoted once as saying, enthusiasm is at the bottom of all progress out there. That's right. That becomes maybe your A point on an A to B equals CD. We're certainly going to take a look at some of those in the marketplace. He went on to say, Mr. Ford went on to say, with it, there is accomplishment. Without it, there really only are alibis, what I call excuses out there. And if we study the unusual successful people that are around us, folks, what you will find is they are full of enthusiasm because, you know, it just simply is contagious. Now make sure that your approach to your daily activity is filled with what I'll call positive adventure, because you never know what it is that you're going to find on the other side. In fact, if you trade these markets, you don't know really what's going to happen next. You don't control the markets. All you can do is you can control what it is you control. Those are called stop losses out there. You go ahead and you trade your patterns out there. Always remember that what we do, folks, whether it's good or ill, all of that can be contagious out there. A smile. You know, and I've talked about smiles before, and I'm smiling right here and deep inside my heart. I hope you are as well, because we know that smiles are contagious. If you don't believe me, just go walk around and just smile at everyone that lays eyes on you, because they will smile back, folks. So let's go take a look at these markets out here. Incidentally, the derivation of the word enthusiasm, it's called filled with spirit. And there's all kinds of spirit in these markets. You know, when I last left you, which was Thursday, I gave you some parameters to take a look at on the ES Mini. In fact, we were taking a look at one of my hammer candles, and what I said was if you get a close below it, if you're long, you're wrong. Even though it was a 30-minute chart out here, it was because we were up at the highs, and there were a couple other things that we were looking at. It made sense. That hammer candle was right here. In fact, it was coming on the show when we came into the 9:30 a.m. Open of the markets on October the 18th. We got a close below that on Thursday at about 2 p.m., and so I want to make sure that you know that I switched from short-term bullish to short-term bearish out there. So we went bearish, we went short the markets. Right now, if you take a look at the ES Mini then closed out at 14 54. It's trading out right now at 14.25. It's trying to make an A to B equals C to E up. I suspect that it may be able to do that today. Why? Well, if you go take a look at the trend index that was developed by Richard Arms out there on Friday, you had a nice reading on the NYSE. Looks like, what was the trend? About 2.54. When you get a closing above 2, the market wants a one-day bounce. Will that be today? Will that be tomorrow? Well, we'll see. We'll see out there. However, if you are a bull, I would caution you, make sure that you've got your seatbelts on. Why? Because if we take a look at these markets, they are truly up against support levels that ought to hold. But when you take a look at the way that the market came down, and you expect to bounce because the market certainly got into an over on a shorter term basis, not on the daily, well, even in a couple of cases on a daily basis, but really getting in towards those oversold areas. So the market needs to either travel sideways, which it's really been doing here ever since the close of Friday, in order to work off those oversold conditions, or it has to do an A to B equals C to E up out there. We'll see which one the markets want to do. If we go take a look at the now, if you are watching us on TigerTV, you're able to see my charts out there. If you're listening in on the radio, maybe it's at tfnn.mobi. You can always catch an archive of this show on Channel 9. If we go take a look at the daily charts out here, let's go to the daily S&P. We were looking at the 30-minute just a moment ago. If we take a look at the daily ES Mini coming off of the June 4th low, that's our first touch point. That is a trend line. That's that black horizontal, diagonal line that you see out there. That is the first touch point. Your second touch point is going to be the July 25th low. You can see right now that you've got the ES Mini traveling right at that line. Now, what you can also see is since June 4th, that line has not been broken. It's been tested. It came back and it was tested. X marks the spot on October 15th. Obviously, you got a long-ranging bar coming down into it on Friday. Had a full weekend to rest. We'll see if this area is going to hold. But if it doesn't hold, folks, it's another signal out there that if you are bullish, you've got to be really, really, really careful out there. Because breaking a trend line going back to June 4th, that's several months out there. That would be saying something significant to you. I think what else it's saying things significant to you, we've got all kinds of earnings coming out this week. This week is a slew of earnings, but what we can take a look at is the earnings information from last week. You take a look at IBM, you take a look at Google, and many others out there. And in a bullish market, bad news gets what? It gets consumed. And we didn't see it get consumed. We saw it get sold off. We take a look at IBM. We take a look at Google and others out there. And there's, so this week is very, very important. I know you want to pay attention to this trend line here, whether it's on the indexes or on the ES Mini. So it's also trading right near a horizontal area of support. It's got a little bit further to go to test it. That's really taking a look coming off of, you could say, the March 27th highs out there, right in the 14.19 range. You kind of adjust that horizontal support just a little bit up or down. So you've got the ES Mini trading right there. So the ES Mini not looking too bad. Let's go take a look at the other futures contracts out here. Well, let's go take a look at Mr. and Mrs. Dow. As we take a look at the same trend line out here, we come off of June 4th. That's our first touch point. You got two other touch points out here. June 24th, the low out there was 12,462. You had a low of 12,472 on the 25th. And what we can see, what happened here, is on Friday's session, you had a close below that. Ooh, not a very good sign out there. Now we can take our horizontal. I'll just go ahead and draw a horizontal line out here, and then we can move it up and down just to take a look at it. So you can see really the Dow trading right there at the horizontal trend line area. And not trend line, but the resistance and support line. It is the support line right now, because I would say it's trading just above it. You've got the Dow also trading above Super Mario Day. That is September. Well, it's trading right at it. I would say that is the September 6th day. The low there, 13,044. The high of 13,288. Trading down to 13,265 right now. But what the Dow did do, folks, is it broke through that trend, not with conviction, but it broke it. Now, when you break a trend line or you break a channel line, what is typically going to happen? You're going to go back up there and test it. Let me tell you, if today is going back up there and test it, that's about as bearish, and it rejects it, that is about as bearish as you possibly can get out there. What you'd like to see is you'd like to see it move a little bit lower, then go back up there and try to charge up and try to get back inside there. We'll see what the Dow is going to do, but it is also really up against a very important support level. If we go take a look at, and the candle does not look very promising there. Let's go take a look at what else had been, let's take a look at weakness that we've got out here. Let's go start with the NQ. Let's go take a look at the NASDAQ, because we know that has really been weak. Let's go ahead and remove this trend line here, and let's go with the more conservative approach, because that is really the one that is trading at right now. So now we're coming off of June 4th. That low out there was 24.3375. Your next touch point here, that low, July 25th. So it makes sense. It was the July 25th level that we just took a look at on the Dow. I believe it was the 24th or so on the S&P. And if you take a look at the NASDAQ futures, came right down into that area. Actually opened up last night. Traded a little bit lower, really touched that level, trading just slightly above there. Of course, there's A to B equals CD patterns out here. If we take a look at just simply the shortest one, here's your A to B equals CD, and that completed right there at that trend line with what? A 1 to 1.618, A to B equals CD. The bulls, hopefully, if you're bullish out there, they better be punching in for work here right now, because if the bears take control during the session, that line also going to be broken. And what's that going to do? What is that going to step? And it's really also at a horizontal area of support out here. We can draw that line just simply coming across here. Let me put that on the screen for you. So we're going to take a look at this little horizontal area, so you can see really price right in, right lockstep right there. Really critical session here over the next couple of days. Going to really give us a clue. Now, if you do get a bounce in your bull, what it really could be doing, folks, is setting up the next A to B equals CD down. You just completed the 1 to 1.618 A to B equals CD down. If you had Tom's book, I'm assuming that you do, Timing the Trade or the Art of Timing the Trade out there, you know when you do a 1 to 1.618 A to B equals CD, the market should do something else out there. What could that else be? Well, just simply move sideways, build some cause in order to bust through prices to the downside. Let's go take a look at the Russell 2000 out here, see what that is trading at. Also trading at a critical support area. Just simply come off of the trend coming off of June the 5th. So that is the low out here. Let me make sure. Was it yeah, it's close enough to the low. We're using June 5th. That is 729. Now, we could actually pull this down just a tad if we wanted, but if we go to use that same July 25th level, that's what we're going to do. That low, 759.20. What you can see is the Russell 2000 futures also coming right down into that trend line. Also, you can see that horizontal support area that is really trading just below. It is trading below Mario Draghi Day out there. Really, if the Russell 2000 gives it up, the A to B equals CD out here, folks, this is really the A to B equals CD pattern that I'd be looking at. That would say Russell 2000 would be looking at 778 to 761. I would say 761 would be the likely target. That would be a 1 to 1.618. A to B equals CD. Quick look around the markets. You got the DAX in Germany off 20 points right now. FTSE down 3. In Asia last night, they were having a little bit of a party. They didn't get the Kool-Aid that we were serving up on Friday. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and it's going to be a great Monday evening. I believe we've got a Game 7 in the baseball playoffs, San Francisco against St. Louis, so that should be great out there. I hear there's a debate down here in Florida, down at Lynn University, down in Boca Raton. So I guess there'll be maybe a little bit of gamesmanship going on there as well. Let's go take a look at these markets out here. Let's look at the DAX. Now, we just took a look at the U.S. markets, took a look at the futures markets out there. We saw that they were up against the resistance level, just simply a support level, just simply coming up against the lows off of June the 4th out there. Now, let's go take a look at the DAX because, you know, the DAX at one time was a weak link out there. But let's go see how the DAX is doing, just taking a look at that same trend line. So we're going to start off here, off of the low from June the 5th. The DAX was trading down to 59.14 and a little bit of change. If we go up into its next touch point, which was June 28th, you could also use, you could argue that you could use June 26th. We use June 25th or June 24th or July 24th or July 24th and 25th in our area here. But I'm just simply going to go ahead and use the next touch point here of June 28th. That's that black diagonal line that you're looking at. Look how far away the DAX is from that diagonal line. Germany, the DAX, is a stronger marketplace than the U.S. What do you say to that? Something to think about. So that being said, the question is there any bullish pattern that you can see out here inside the DAX? Why, yes, Steve, I certainly can. Let's go take a look at that. What the DAX is doing is traveling in a little horizontal consolidation box range. You can use as the low of that, really the coming off the high of September 6th. That was 71.72. I'm just going to draw a line. We're going to use a red line now. Well, how about if we use a really red horizontal line? Okay, there's a straight line. So there is really the bottom of our consolidation area, the bottom of the box. You can see the DAX last time that was down there, visited on October the 11th, had a nice little bullish engulfing candle out there. If we take a look at the high range of the DAX, really kind of trading, got up there a couple of sessions ago. So, we'll use that. We'll use really the close, I suppose, of the September 21st date, 745, because you did have the DAX get up to 745. 70, got up to 74.47 on October the 18th. The close there on September 21st was 74.51 out there. So there, that little red horizontal line, when you really take a look at so the DAX actually is something you want to be paying attention to, because of the interconnection between these markets out here. But the DAX is clearly much stronger than the S&P, than the Dow, than the NASDAQ, and the Russell 2000 all put together out there. And it is trading up towards the top of its range out here. So apparently it was not worried that our Dow was down 205 points on Friday, and that the S&P was off 1.6%, and the composite down 2%. Right now you've got the DAX off only 0.24% here. And so there is some strength out there in the marketplace. Let's go take a look at gold and silver. You've got gold trading out right now at $17.25. That looks like it's sitting right on the 50-day exponential moving average. That would have been, looks like 17.2370, and it's trading at 17.25 out there. Gold has more room to run to the downside. So if you're long gold out here, I'm not seeing a whole lot in the way of bullish candle signals to tell me that the move to the downside is over with. In fact, if we just simply take a look at in fact, if you are bullish, you'd like to see a nice little pullback here, at least to the 0.382 level. That would take into the 1690-ish range. But I suspect that what we'll see gold actually pull back into the 1630 and change. Really nothing wrong with it. If you take a look at going from the low that was established on May 16th, that low was 1526, all the way up to the high that was put in here on October the 5th, out at 1798. So gold looks like it wants to pull back. It's got more room to run to the downside before it moves into oversold territory. Same thing on silver, although silver is a little bit weaker out there. The silver kind of blowing through on Friday. It's a 50-day support out there, but really coming right back to its 0.382 level. It's a normal spot where you would see people getting off of the elevator here, where people who were short would be starting to take some profits off the table. But again, no real bulls showing up. In fact, on Friday, there was a very bearish candle pattern there that lasted over about a period of 4 or 5 days out there. So I suspect that what we will see is we'll see silver pull back as well. Could come all the way back down and test the declining trend line. I don't know if it'll really get all the way back there. I mean, that would be a beautiful trade if it came back there. That is on silver. In the pre-market out here, moving to the upside, you've got Apple up, Ancestry.com, ASML Holdings, Peabody Electric, Prospect Global, and Arch Coal. To the downside, Overseas Ship Holdings, Nexen, Caterpillar, Freeport McMoran, and a bunch of Pro shares. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 15 points. S&P not really out of the gate, off 47 cents right now. Composite up 2. Russell 2000 hanging out with the S&P down 37 cents. Microsoft off 10 pennies. Intel up 11. Google down $3. Cisco up 11 cents. Apple up $6 and change right now. Let's take a look at what's popping and what's dropping. To the upside, you've got Cascade Corp up about 18%. CASC is the ticker symbol. They're the leader in the clubhouse. That's up $9 and change. Apple right behind them up $7. You've got Volcano Corporation, VOLC, up $3. That's up 11%. Peabody Energy, BTU, up 12%. That's up $3 and change. Walter Energy, WLT, they're up $3. That's up 7%. Ancestry.com, I believe, out with numbers earlier today. ACOM, the ticker symbol there, up 8%. Consolidated Energy, CNX, also up 5% here. Prospect Global, they're the big hitter, up 38%. That's up $1.11 on a $3 stock out there. What's the deal here? Chemical, $2 billion potash purchase agreement. It's like they've got some, I can't really tell what that is. Prospect Global Resources and Sichuan Chemical signed a $2 billion plus 10-year purchase agreement. So that is helping that stock for potash. Okay. Then to the downside, and then we're going to take a look at one stock here to the downside, folks. It's pretty. You certainly, earlier when they opened, I said you can't control the market, but what you can control, certainly are the stops that you put in place here. You want to make sure that you trade with them. Well, here's a great example. We're taking a look at OSG is the ticker symbol. It's we talked about it, Overseas Shipholding Group. Now, stock trading out at $1.47 here. They are a tanker company engaged in the oil transportation business, crude oil transportation business. This equity here, folks, if you go all the way, this is a weekly chart that we've got on my screen here. Goes up and makes a high on July 13, 2007, out at the, it gets up to 91.49. Has a nice little bearish engulfing candle the following week. That was a signal to get out. And so 91.49. And I told you it was trading at $1.47 right now. And you had major volume last week, and you got that continuing on the daily chart out there. So they're clearly headed out of business. Pretty amazing, huh? Let's go take a look at some of these other stock charts out here with folks that are popping and dropping. So let's go take a look at PGRX. Let's go see. That should have some pretty good energy in here. Prospect Global. PGRX. Yeah, we'll get that right. PGRX is the ticker symbol. So that is up healthy with some major volume in it. Oh, what is this stock chart? Yeah, I don't even like looking at this thing. We'll just kind of ixnay this off of the stock charts to look at. This thing is, 1,500 shares sold on May 3rd, 2012. So let's just forget that stock chart. Nobody wants to really pay attention to that, or I suggest that you don't get caught up into it. Let's go take a look at Cascade Corp. They're the big leader to the upside. CASC is the ticker symbol. And that's up a nice 18% here this morning, so that is gapping up and doing so with volume. So let's go pull this back, see what this is running into. Okay, it's got some highs out here. Let me see what they were out with earnings. Let's see, CASC is the ticker symbol. Toyota Industries to acquire Cascade. Okay, well, so we got an acquisition. And that's what, you got to be really careful shorting stocks out here. I've mentioned this before, because as you've got these companies coming out with earnings, because of the strength in the U.S. dollar, it's making it very difficult for companies to hit year-over-year top-line numbers out there. And so the easiest way for them to be able to do that is going to be through acquisition. So you expect to see a lot of that. That's where the dollars that they have should be put to use. If people right now are putting their dollars put to use to buy back stock, you've really got to say, something to think about, because that, to me, that's nothing more than trouble out there. They should be using those dollars for acquisitions. Let's go take a look at Apple. That's up about $8 and change. See what Apple is doing out here. We'll also take a look at OSG. Let's get rid of that. We'll also take a look at IBM and Google. So as we take a look at the Apple chart out here, trading, let's see here. All right, give me a moment to pull this over. Let's take off the lines on here. So let's take a look at Apple. So Apple up today, just 10 minutes of trading, already done 2 million shares. However, on Friday, coming down with 25 million shares and taking out another swing point. What did it do with volume? Interesting. Let's take a look at this. Let me refresh my screen here. So if we take a look at, I'm looking at the swing point out here from October the 9th. That had 29 million shares. Yeah. And he came through with 26 million shares. So he didn't exactly take it out with volume to the take out that swing point. So I'd expect that would be where Apple should travel to today. The low of that is 623.55. We'll see if it wants to get inside of that area. Of course, Apple's certainly breaking trend lines out here, breaking swing points. If you just simply come off of May 18th, you can see that. So that's where it's really headed to. It is headed back at least to the top of that trend line. That's going to take you really to the bottom of that October 9th level. Again, that is 623.55 out at 619 right now here this morning. Let's go take a look at Google, see what Google is doing. GOOG, the ticker symbol, having another horrible day on Friday. Big volume coming out of that. You had 11 million shares on Friday. Thursday, 12 million shares here. Really not doing a whole lot this morning. Let's go down to a real intraday chart out here. Let's put the 5-minute intraday chart out on and see what it's doing. Let me refresh my screen here. and see if there's any kind of volume inside this, or see what it's coming up against as we take a look at the intraday chart. There we go. Oh, look at that. So if you take a look at volume out here, let's see here. So you'd have to say that right now where Google would, if Google tries to make any kind of move higher, it should run out of steam as it gets to the price point of $697.50. It's trading out at $680.11 right now. That is quite a high volume bar out there. Looks to me like it's just going to consolidate here sideways for a bit before it probably takes its next leg down. No real volume, though, after the large sell-off, which was at 9:30 on October the 19th. Not certainly compared to the bars earlier than that. If we go take a look at, so let's go take a look at some of these other stocks here. Open Table up 7% this morning. OPEN is the ticker symbol. So if we take a look at Open Table, at one time I think that was a IBD stock out there. Gapping up this morning, trade out at 46.72. This thing has been in a sideways consolidation mode here for quite some time. Let's go see if there's any kind of news on Open Table out here. OPEN again is the ticker symbol. Nothing that I see. If we take a look at this here, had a really good, come on, mouse, work for me. There we go. Oh, look at this equity. So this equity makes a bearish engulfing on the daily chart going back to April 26th. It was trading up at the $117 mark, trading down at $46 right now. So this equity here in a world of hurt for sure. Now all that it's really doing is trading sideways. The top of the range, you would say, would have to be in the September 14th day would be a good area. $50 and a little bit change. September 14th has 583,000 shares, 133,000 today. Looks like that's where it wants to get up to and test, which is nothing more than really just kind of the top of the consolidation. You could say it's just a tad higher than the high of September 14th, but not much more than that. I don't necessarily think that this is a good short play for sure, but that's what Open Table is doing. Let's go take a look at what is really popping here to the downside. Let's go take a look at the number one, VF Corp. VFC is the ticker symbol. That is trading down 5% this morning. VFC, let's see if this has got any juice behind it. Trading down with volume, but looks like this is going to come back into an area where it most recently broke out. So this thing's got a number of gaps. So we take a look at this equity so far this morning, down with volume, 365,000 shares. Last time this broke out, and this is where it's headed to, is going to be this little open window out here. Let's go ahead and put a line on the window. This is the first place that is going to give you a clue as to what this equity is going to do. So this gaps up, has nice wide price spread, decent volume. If you take a look at the bars on the chart here, that's July 19th. Moves up with 2.5 million shares, gaps up. The low of that gap is 145.23. So 2.5 million shares, had two nice tests, came back with 895,000 shares on August the 1st, really tests that area August the 2nd, 640,000 shares. That window still open, then goes ahead and moves higher, trying to, well, it did complete an A to B equals CD out here. You know, not a bad looking stock chart when you pull it back, with the exception of where some of these volume candles are at. But this equity here doesn't look too bad. If there is not huge volume that comes out of this thing, this might be something to take a look at as it comes back and test that window another time. You'd want to see it test the low of 145.23. Do it on less than 2.4 million shares. Ideally, you'd like to see it come back on less than 640,000 shares, because that is the swing point low from August the 2nd out there. And then you'd like to see some kind of bullish candle formation out there. That is on VFC, VF Corp. They're the leaders in the doghouse this morning on the way down, off $9 and change. Polo, Ralph Lauren. I think I have got a Polo Ralph Lauren shirt on, as I normally do. RL is the ticker symbol. They're down $4. So let's go see what's going on with this equity, down about 2.5% here, gapping down this morning. We'll pull it back and see if there's any news on this. Were they out with earnings? Let's see here. Ralph Lauren, I don't see anything on this. Down 2.5% here this morning. As I said, the volume so far, 136,000 shares. So this thing here trading sideways. Where is this going to run to? It's going to at least run down to the swing point low of September 28th out there. That level has 1.1 million shares. You're looking at a high of 152, a low of 148. That is where it is headed down to. It's got some last gap down on the 11th of September. Didn't last very long out there. That's got some pretty decent volume, 2.5 million shares, so that's really what it's running into. It's also got some pretty decent support here on this candle from August the 8th, 2012. That has 3 million shares, the high there, 152. So this thing has got some pretty decent support just in this little sideways range. Watch how Ralph Lauren comes into the September 28th swing point high of 152.28 out there. Let's put this on a little bit longer term chart out here. Okay, so this thing gapped up with really nice volume on February 8th, 2012, 5.7 million shares. Came all the way back and tested that level. And folks, I'll teach you something. Why not? I always like to teach things. So let's go take a look here. This also had a open window. It's had a gap out here. So if we take a look at it, you can see here's the gap, right? That from February 7th, the high there, 158. Now, comes down, pulls down into that area and makes what kind of hammer candle? Oh, I said what kind of hammer candle? What kind of hammer candle? That's right. Makes one of Stevie's nice hammer candles. Now, as it comes down in there, though, it's coming down with volume, was increased on the way down there. Not necessarily what you want to see. Only 2.7 million shares, but the trading session before, 556,000. Did make a hammer candle. And if you close below a hammer candle, what happens? If you're long, you're what? If you're long, you're wrong. That's right. That's, it's almost like, anyways. So, and this equity here, that proves it. So that's one thing that I can test you. The other thing is that this thing here closed that window. Window got repaired, so it was no longer a support area. Once you close that, what did that say? That said you're going to go down and test the next swing point. What does Ralph Lauren do? Gets all the way back down to the next set of swing points, which was December 22nd, 2011, as it gets down in the 135.35 price. So you got a number of nice signals out there with Ralph Lauren telling you that it wanted to come all the way back there. So this has got a pretty wide trading range out here from the lows of 135 all the way up to the highs. Well, we're going to say that really the real trading range is going to be that hammer. It's going to be the new window. Oh, what a stock chart to look at here. So now let's go take a look at the falling window, the gap down again on Ralph Lauren. Let's go back to Stevie's hammer candle. That is May the 8th, the high out there. 163.99. Let's come across that. Let's come across that with a dark black line. So now what we see here is as it gets up into that area, what happens? It acts as a resistance zone, and it really confirms that. That, to me, says that Ralph Lauren certainly going to come down and test the September 28th date, but could really bring in play the lower part of this trading range out here. Actually, Ralph Lauren giving you a pretty good sell signal. That was a really good reward to risk after Friday's rejection of that area. You had 618,000 shares going into 2.7 million shares. The last time that was tested, so pretty cool. So here you've got May 8th, gaps up again, or gaps down with 2.7. The top of that gap, the top of that hammer, 163.99, 2.7 million shares. Gets tested with 1.2 million shares. Gets tested with 695, 711, 614. Friday, only 618,000. No way was that going to go ahead and repair that little falling window out there. Ralph Lauren has an area of resistance out here, pretty well defined. 877-927-6648. Dow off 38, S&P off 3, Russell down 1, Composite up 2, all because of Apple trading up $10 and change right now. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. The Dow off 31 points right now. S&P off 3. Russell 2000 off a point. You've got the composite up 3. That is all about Apple. The NDX is up about 5 points. And what you've got going on here in Apple right now, folks, is nothing more than a short covering situation that's going on. That is all that is moving Apple. Apple getting on an intraday basis into some real oversold area. And the bounce that we're seeing here, even though it's up $11, it is pretty tepid. It is pretty weak out there. So that is what you see going on inside Apple. At least that is my take. It is nothing more than short covering out there after Apple getting to some pretty extreme levels there on Friday in the oversold area. And so this little bounce here of $11, be careful. Don't read too much into it. King dollar back 23 cents here right now as we go take a look at the King. Haven't done that here for a bit. Let me find the U.S. dollar index. There we go. Okay. So let's go take a look at the U.S. dollar index. Now, what the U.S. dollar index did was it also broke through a downtrend line here coming off of the highs from July the 24th out there. So that is that black diagonal line that you see here. Broke through it on Friday. Of course, when you break a trend line, what are you going to do? Eventually, you come back and you retest it. Really looks like that's what the U.S. dollar index did here inter-session today. Trading out right now at 79.67. You get a real break of this trend line. Number one, it's going to set you up into the level of $80.31. That would be the first area, because you can see also the U.S. dollar index here has really been trading in a sideways range here. We can see this has been the area here of resistance. And on the downside, you'd have to say that, this is really a little box here that it is traveling into. Now, a bullish sign here is just simply the mere fact that it is just traveling in that sideways range, because if it does break, that should resolve itself to the downside. But I'll take here first the mere fact that it broke the longer-term resistance area as it broke through that downtrend channel. What's that all about? Certainly that is going to be all about the queen out here as we take a look at the euro, really kind of having a up a bit, straight out at 130, 522 right now, just really trading sideways. Where there is movement though is inside the Japanese yen. So the finance minister is finally out there trying to push the yen higher, and they're having a pretty good success rate at it. Let me pull this back here. Let's get rid of these couple lines out here, couple patterns out here. So you've got the yen. Take a look at the yen as it breaks its trend line. That's going back all the way to March 16, 2012. The yen broke through there. This is what you would normally see. Breaks through there on September 14th. That was the day after. I believe that was the day after Ben Bernanke Day. And it breaks through there. What's it do? It comes back down, almost touches it, close enough. Gives you a nice bullish engulfing here on the session from September 28th. And now what you've got the yen doing is making an A to B equals C to the up pattern. If we take a look at that, your A point on this is going to be the low of September 13th, the B point September 19th, the C point out here on September 28th. So the yen wants to get up to the 1 to 1.272 level. That's going to be $80.08 out there. The yen weakening against the U.S. dollar out here. That's why U.S. dollar really pretty much flat, only down 3 pennies out there. Gold trading up $3 and change. Bonds. Let's take a quick peek over at the bond marketplace. So not a bunch of time. Bonds traded out right now at 147.04. Stay tuned, folks. Money Masters show is going to be up next. And if you're off to start your day, have a great day. Do it enthusiastically, folks, because enthusiasm is contagious. Have a great morning.